All right, we've got a little under 3 minutes to go, 2.5 minutes until we get this thing kicked off for this week. If you're in there watching, feel free to check in the chat. Let us know you're out there. Appreciate the patience, and we are going to get this thing going sooner rather than later. And shout out to Haas00312 for the follow. Appreciate that. We've got Rich H in the YouTube chat, the first person to check in the chat tonight. Good evening, Rich. How you doing? Thank you for joining us. And we've now got just under a minute to go until we get this thing started. Analytic Reason in the YouTube chat. Appreciate you checking in with us. And we've got 10 seconds to go until we get this thing started. All right, and that is the timer. We are going to get going. There's the notification. I'm going to close out of this. And okay, we've already got a request right there. HPQBA Diamond Handsies in the Twitch chat. Appreciate that. Let me get I got to get my notepad out real quick. VS Hourglass. That's VS. We know who you are. Appreciate the follow on Twitch right there. How you guys doing? All right, we've already got a few stock suggestions. I got to break out the old pen and paper. Cliffo in the Twitch chat. How's it going? Let me write these down really quickly so that I do not forget them. And actually, I don't even need to be doing this. What we were doing last week, I think, worked pretty well, where I put them down over here. I'll put them, I guess I'll put our list out to the right over here. So we've got HPQ, we've got BA, we've got AMD. I'll call it stocks to discuss. All right, so if at any point you guys have a stock that you want us to take a look at as we're going through this, feel free to let us know. Cash Money, appreciate the follow right there. And checking in the chat, I love it. And we've got Obad right there in the YouTube chat as well. I love it. So let's get into it. We've got S. Kotha. There we go. Everyone's following tonight. I love it. Appreciate you guys joining in with us. So here are the stocks we are going to discuss later on in the stream. But the way that we always kick this thing off, for those of you who are new, is we do a quick recap of what happened last week. Then we're going to talk a little bit about what we think we did well, what we think we didn't do well, and then we'll get into what's probably a lot more relevant for you guys, which is going to be what we're looking at as we head forward into the upcoming week in the stock market. So as far as last week, I mean, we're not going to win every single week. It was a losing week, but what we did do was we accomplished our goal on a weekly basis of outperforming the S&P 500 index. And those of you who follow us again know that we do that by benchmarking against SPY, the S&P 500 ETF, which was down 0.57%, and we were only down 0.46%, so we outperformed by 0.12%. So we're super happy with that. I mean, we're never thrilled to lose money, but I think last week was a really good example of why we use the strategies that we do. Because if you take a look at our long positions here, right, we had UWMC we had Corsair shares, we had BBIG shares. All in all, those took away $2,000 from us. So even though our long positions pretty much all went against us, we were still pretty much able to tread some water and get right up around break even for the week. So it's always great when we could, in the face of stocks moving against us, kind of tread water, because eventually stocks are going to keep moving in our favor, and we're finally going to start to see some move our way. And when they do, we're going to see some really nice profits. But the fact that pretty much everything we were in last week turned against us, and the fact that we were still able to outperform and didn't take too big of a chunk out of our account is a really, really successful week in my mind. Just because you lose money doesn't mean it's an unsuccessful week. But going from top to bottom, UWMC had earnings. Unfortunately, those didn't go too well. Like you mentioned, Diamond Hansy's brutal week for a lot of stocks. So for how bad things could have been and how they turned out for us, we're definitely not too mad about where we are right now. But UWMC, they had earnings. We could pull up the chart really quickly here to take a look at what happened. They ran up to 8 right before it, so we thought we were going to get away with, cruising a max profit on the 7.5. The earnings weren't great. It bounced off 7 a couple times, and then eventually settled at 7.25. We closed half of these out a little bit earlier in the week for 32, and then I think we closed the other half out for 31-ish or something like that. But all in all, our average debit to close was 32, so we did lose money on a week-to-week basis, but, a few weeks ago we sold these things for 40 cents. So overall, we made money on them despite the fact that the stock dropped, and that's, a common theme with a lot of what we're doing in here. And I've got that broken out on a separate trade tab, right? So we sold these things for 40 cents a piece. We closed half for 30, closed the other half for 33. And, we then rolled these into September, and we could talk about that a little bit later on in the stream. We rolled down to 7 strike. We rolled out to September expiry. We've got a really nice break-even price of $6.85 on those, so we'll circle back to those later, but let's continue down the list here. Icln we don't really talk about because it's just a super boring stock, and I would not even recommend you guys get in on it. It's more so we have it to prove the point that week after week after week, if you see all of the decreases that we've had here, that no matter how bad the stock is, with enough patience, you could eventually get that break-even price back to where the stock is. So this one is proving a point more than anything else for us, but not one that I would recommend people try to jump in on. Corsair is one that took us for a ride. I mean, the past few weeks even, look at Corsair, $1,800 loss on the shares. This last week, we lost $1,300 on the shares, and it's tough because this was pretty much the largest position that we had in our portfolio. So anytime you have something moving that sharply against you, it makes it tough to win. So that's why I'm still not too upset with the result that we had last week. But with that said, we had a covered straddle that was expiring, so the 27.5 strike calls expired worthless, and the 27.5 strike puts that we were actually able to exit out of these during the day on Friday. This thing took us for a ride because if we zoom in on the 5-day chart, it ran all the way back up to 26.80, and to be honest, it was kind of just dumb luck because we got out of the 27.5 strike puts around here. Because if you play around with this, right, you could see that our net loss on the week was $689. I mean, if this thing dropped back down to 1.2, you start to lose a decent amount of money. This position right here was really swinging our account. So when it got to the point where it was at 0.83, and we said, hey, that's something we could walk away with the $105 profit on just for the week. We weren't going to get greedy. We were going to take that. And it ended up being a really nice move for us because it pretty much immediately dropped and finished at around $26 a share by the end of the day Friday, which means that these would have been worth $1.50. So by not getting greedy, closing out and taking profit when we saw it, we finished with a $6.89 loss, whereas if we kept holding on to these 27.5 strike puts, we would have lost $1,700 on the week. So that was a really nice swing of going from potentially losing $900 to taking that $105 of profit off the table. So that was a move that we made that I was pretty happy with. Now, the flip side of that is, we do like to close positions early because when we see profit, you're never going to go broke taking a profit. You can reduce your risk. You could get some buying power back, and you could move into less risky or, positions with a bigger cushion. And that's kind of what we do with Corsair as we close that 27.5 strike put out and then rolled our 27.5 strike calls out to September. But, that isn't always going to work where you get out and all of a sudden the stock falls off the face of the earth, because the BBIG play that we have right here is almost the exact opposite of that, right? We had these 2.5 strike puts that we sold BBIG on Friday was, around 220. So these were going to be worth about 30 per contract at the time of expiry on Friday. So we said, you know what? We see that these are trading for 25 cents. We're going to limit the damage. We're going to close these out, reduce our risk a little bit, and, just move on to the next play. And we would let our shares ride, our 3-strike calls ride, and close these out. Now, whereas with Corsair, we closed these out and it immediately dropped, and we were happy about the decision. When we closed out BBIG, it pretty much spiked, I think, a good 30%. Yeah, I think we closed right around here. And then, less than an hour after that, it spiked up to almost $3 a share. But from there, we were able to close the 3-strike calls out for 8 cents and then put what was called a trailing stop loss on the shares. Because when we started managing this, it was right around 280. We were paying close attention when it first spiked. So we said, hey, a big spike like this, you never really know how high BBIG potentially is going to go. So we closed out our covered calls for 8 cents, which, would have been nice to have that extra 8 cents. It would have gotten us, $120, but not a huge deal in the scheme of things. When the BBIG shares could have potentially gone up to $3 or $4 a share, we really didn't know. So what we did was when BBIG was at 280 around this peak right here, we put what's called a trailing stop loss order, meaning that if the price at any point on BBIG dropped 5 cents, it would automatically sell our shares. So at that 280 price level, we're still playing it to potentially shoot up above 3, but just to be safe, if it drops back down to 275, the shares automatically get sold. That's what we did. As you can see, it dropped back down and ended up being a really nice decision for us because it dropped way below 275. But all in all, we still lost, a couple $100 on that, but it could have been much worse if BBIG settled around that 225 area, right? So never mad at being able to have a play turn around like that on a Friday afternoon. So, is what it is. On to the next one, CLOV. We rolled this one out to the following week. I think we have this broken out here, right? We sold this initially for 31 cents. We closed it out for, 44 cents. I don't think that's quite right. We closed this out for 31. So I'll have to update that in a minute. But we closed this out for 33 cents, and we moved it on to the next week for CLOV for 29 cents. So I think these were hypothetical numbers that I was playing with and forgot to update. But I can do that right now, right? We closed out for 33. We sold a new one for 0.29, 0.33, 0.29, and we know these are 7.5 strike puts. So what's going to happen right here is if it finishes above 7.5 next week, we're going to get that 580 of profit. And rolling that initial leg, we only had a $40 loss. So we'll still get a really nice profit on it'll be a 2-week trade with about $8,000 invested of capital for a 6.75% return. And if that happens, right, if Clover drops down to 7.5, that's an 11.76% drop on the stock. Yet we're still pulling a 6.75% return on capital. And again, that is one of the examples of why we trade the way that we do, because things can move pretty sharply against us. I think objectively anyone could agree that, just south of a 12% drop in a week is a pretty big drop, all things considered. Yet with our option selling strategies and being able to identify areas that have really good premium like this, we were still able to come out with what would be a really nice return on capital. And over that short 2-week time frame, it's going to be just under a 500% annualized return. So we're really happy about the way that we were able to manage that one. And further, the break-even price, right? We started playing this at $8.50 back on August 13th. With what's going on here right now, let me put the formula in here. It's going to be max 7.5 minus the stock price and 0. But if this thing drops down to, let's see, 7.30, we're still making money. If this thing drops down to 7.21, we're losing a bit of money, and that's because I think I calculated that before. I think 7.23 should be break even. There it is. So 7.23 is going to be our break even price on a stock that, a little over a week ago was 8.50, and it could go all the way down next week to 7.23, meaning it could drop 15% in 2 weeks, and we won't lose a single cent on the trade. But let's go back to updating this based on where it closed on Friday, and we are sitting in the driver's seat on this one as we head into the next week, looking to make about $580 of profit at max profit if those things expire worthless for us on that leg, and 540 overall. So we're happy about that one. We rolled that out, easily managed. And, you could look at the charts for things like these. They don't look great on a 5 basis, right? It was pretty consistently moving against us. But the fact that we're able to identify opportunities like this where the premium is so great, in fact, that it would take an even bigger move against us to make us lose any money at all is really, really solid value. So we're happy to keep that one going. SOL, similar position. We didn't roll this one to next week, and I'll tell you why right now. So we sold the 6.5 strike puts. Let's pull the chart up. Back when it was trading at about, do I have a trade breakout tab on this one? I do. Back when it was, and this is when I was trying to plan something out, which didn't really come true, but this thing was trading at 690 for us, and we sold a 6.5 strike put for 15 cents a piece, and we said, okay, that's a pretty decent cushion, because at what our break-even price of 635 would be, right, the 6.5 strike minus the 15 cents of premium, that would represent an 8% drop in a week, and as long as the stock didn't drop 8% in a week, we were going to make money. As is sometimes the case with these trades, they can fall pretty quickly. It went from about $7 a share down to a low of 6.11 by last Thursday. So we said, okay, we were looking at a loss, but on Friday, it rebounded up to about 6.45. We saw the opportunity to close these out for 8 cents a piece, and that was going on when SOL was at about 6.45. So all in all, we took a look at this trade, and while in a vacuum, right, $105 of profit in, the sense of how large our account is from a percent return perspective isn't a ton of money, right? So we weren't really chomping at the bit to say, oh, we're taking this huge profit off the table. But if you take a step back, think about the trade, think about what happened, right? SOL basically dropped 6.5% on us during that week, and yet we were able to walk away for a profit of $105. If you had laid that scenario out to me at the beginning of the week and said, hey, you're going to sell cash secured puts on this stock, but it's going to drop 6.5% on you, but you'll have the opportunity to make a profit still, I would have taken that in a heartbeat, right? Because sometimes your profits aren't going to be as big as you want, but as long as you're consistently identifying and taking profits off the table when they present themselves to you, you're not going to be going broke, consistently taking profits. Those gains are going to compound. Some weeks you'll hit max profits, some weeks you won't, and that's okay. Like, we lost money this week, but that's okay, because in the scheme of things, we've rolled our break-even prices down. The downside is maybe that we just have to wait another week for some of these plays to work themselves out, as opposed to getting the instant gratification of max profit off the bat. But while this doesn't pop off the page as a 90-cent gain on a week-to-week basis, or a $90 gain on a week-to-week basis, it's good, smart investing to take that off the table and move on to the next one. And that leads us to FFIE, where things can move against us pretty severely, and yet we still have ways to manage those positions. So if we pull up FFIE's chart, and I think I've got a tab for this one as well that we could talk about. There it is. It was trading at about 11.20 when we started. Oh, that's an old one. That's an old one. And I don't have a new one for it, but we'll walk you through what was going on, right? So we see the chart right here. Beginning of the week, this thing was trading at about $10.80. With the FFIE, the implied volatility on it was decently high, so we were able to sell some options that had a ton of premium on it. And we were definitely happy to do so when, in plain English, when we sold these 10 strike puts, where are they, for 30 cents a piece, you're basically telling me that we've set up a trade where the stock's trading at 10.80 a share, and as long as this thing doesn't trade below 9.70, this bottom red line, we're going to make money on that individual leg of the trade. So we said, absolutely, we'll take that 100% of the time. I really like the odds. A lot of these trades we enter into are these high probability trades that work out like this because you've got the numbers working in your favor. However, off the bat, as we can see, this thing quickly dropped below 10, bounced off of 9.50 after hours between Monday and Tuesday, got down to 9.22. But on this drop to 9.50, we said, okay, we always start our plays a little bit smaller because of the option size or the position sizing principles of the HT wheel. So we knew we could have afforded to double down at some point. Now, typically we don't always like it when that point is Monday at noon, because that is a little bit ahead of schedule of when we would like to do something like that. But sometimes that's just what you have to do in order to play defense effectively on a trade. So what we did was we took advantage of this drop. We took advantage of the fact that we had some buying power free that we were able to use to manage our FFIE position. And we sold some 9-strike puts for 23 cents. So again, if you look at this trade in a vacuum, you've got a stock that's trading around 9.60. And then shout out to Locust for the follow as well. We've got everyone coming in from the Discord. I love it. But, in plain English, you put yourself for the second leg of this position somewhere where it's trading around 950. You know, if it finishes above 9, you're going to hit max profit on this individual leg of 345 bucks. And the individual break even on this one is going to be 9 minus 0.23, which is 8.77. Yeah, 877. So again, in a vacuum, I thought that was a decent position. So the fact that I added at the beginning of the week wasn't too big of a concern for me. But with that said, we were loaded up. We had 30 total contracts. Half of them were at a 10 strike, half of them were at a 9 strike. And I think our break even for the week, with that in mind, was about 945, something in that neighborhood. But we got to the point later in the week where these were trading for 30 cents again. And we said, okay, you know, if we're able to close these things out for 30 cents, we're going to pretty much break even on this one. And then the trade becomes, okay, as long as it stays above 9, we're going to make money. So we entered into the trade on Monday where our thinking was, hey, if it stays above 970, we're going to make money. And by Tuesday or Wednesday, when we closed out half of these, we said, okay, we can now make it a trade where as long as it stays above, you know, $8.90 or $9 a share, we're going to make money. Shout out Papa Steve in the Twitch chat. What's going on? And that's exactly what we did. So we got out of these. And while we did take an upfront loss on this leg right here, the 10 strike puts, that's perfectly okay because of what we did to manage our position by opening these 9 strike puts. So we made 345 on those despite losing 150 on the front end of it. And we came out with about a $200 profit. And again, nothing terribly groundbreaking as far as the dollar amount is or percentage return is concerned right there. But again, you stack that 195 return up with the $90 return we got from SOL. You get down to Wish, you get down to what we do with Icln, and all of a sudden these numbers start building on each other. And what you really want to avoid are the big red ones right here that take away from that patient profit building that you're going through during the week. But with that said, moving on to the next one, Wish 6.5 strike puts. You know, volatility on this one's pretty high, so premiums are big as well. We think there's probably going to be a little bit of a floor around this $6 price level if we back it up. And that's almost exactly what we had been seeing so far. So happy to sell those 6.5 strike puts. We got out of those. We took the profit when we saw it. And I think we got out of these on Wednesday afternoon is when we closed these out. We sold them for 18 cents. We closed them for 5 cents. That's almost $200 of profit. And the great part about that was the Thursday, Friday after hour before market trading window, these things were down around 6 cents, which means these would have been worth about 40. So it's always nice to take those profits off the table because at any point during the week, the market could just completely turn against you. You don't necessarily know what's going to happen next. The only thing that is guaranteed in the market is what you see in front of you. So that's what we did. We took that profit off the table and we moved on to some 6 strike puts for next week on Thursday morning's drop. And those are looking really nice so far. This finished up at 11. So we're already pretty much at 50% of our potential max profit on those. So we're happy to keep playing it around the $6 level until it spikes back up. Icln, another opportunity we identified. I think this was our Discord server's free trade of the week, I guess you could call it. But we sold these for 25 cents. We took a look at the Icln chart. It was pretty much near a longer term area of support. If we go to the 180-day chart here and you plot the $8 line, you see some decent support around this level. It bounced off this back in April, dipped a little bit below it, but again, bounced during May. And so that's kind of what we expect to see if it, again, hit that $8 level. That's exactly what happened. If we zoom in back to the 1 month chart, and if it loads, there we go. We got that nice bounce off of 8. So that's why keeping ideas of support and resistance, I'm never going to harp too much on technical analysis, but I do think support and resistance are two very important things to consider because we knew where it had previously bounced. We saw it dropping again. So we had a decent idea of where we could expect it to bounce. We saw that that was the $8 price level. We sold 8 strike puts. Going back to the 1 month chart, it bounced off the 8 level, which I would love to run the mouse over and show again if it were going to show up. But moral of the story, it bounced off 8. We were able to close these out early for $200 of profit. And again, these profits are slowly starting to build upon one another and become a decent weekly amount. So you're not going to make or break a week in one trade. I mean, you could sometimes break a week in one trade, but the idea here is that we have a lot of different trades, a lot of portfolio diversity working together to create an overall positive result on a week-to-week basis. And that'll take me to Nrxp, which is one of the more fun trades, I guess you could say, that we went in on this week. That IV reversion strategy that we have is one that I've been a huge fan of lately, as you can see in our strategy summary tab. Nothing's really loading for me tonight. Come on. There it is. Strategy summary. There it is. So the IV reversion is 14-0. It's actually 14-1 now because IGC we're going to close out for a loss on Monday. But, that's beside the point because we're getting some really nice returns. We're getting a really short time frame for the stock, and we're having a really high win rate. And Nrxp was an example of one of those IV reversion type trades. Excuse me. So what are we looking for when we try to open an IV reversion play? There are kind of 4 things that I like to outline. It's 1, the stock's trading around a decent base, which we saw on Nrxp around 13 or 14. 2, there has to be a big spike in the stock, which we saw on August 18th as it spiked up from 12 to 18. 3, there has to be some sort of good news as well. And that happened when we saw this right here. And they had, I think, some COVID-related news that one of their COVID treatments was safe or something like that. So there was good news that caused the spike. There was a trading base that we could rely on. And there was a big spike. Not to repeat myself again, but those were 3 of those things we outlined right there. And I know I said 4. The 4th is totally escaping me right now. But I'll figure it out later. Anyways, we had this big spike. We know that we see big spikes like this if we plot implied volatility. This is RSI down there right now. Let's plot implied volatility. If we go into the H's, there we go. You can see an enormous spike in implied volatility. And as we know, when implied volatility spikes, it inevitably is going to be coming back down to the ground. And that's exactly what we saw. It spiked up, went back down, and fell off of, Thursday's spike. And sometimes, you see it elevated right here, but it gets, I think the IV readings get really strange after hours. So you could ignore any of those that are in the after hour trading window. But this is a more realistic, view of what IV spiked to, and then we see the inevitable decline in implied volatility as time passed. So what happened is it was trading around 16 or 17 a share. What we were able to do was sell 12.5 strike puts, meaning, max profit points here when the stock's trading up here. So we have a huge $5 cushion, and we were able to sell them for 55 cents a piece. So our break even was just under 12 bucks a share, and we were able to get out of those. Even though the stock had dropped from 16 to about 15, I think, the implied volatility decrease was a lot steeper. So our initial leg that we entered into, we were still able to make a couple $100, even though this technically is a bullish play. And again, the reason behind that is because a lot of the premium and options is driven from implied volatility. When that implied volatility inevitably fades away off a spike, the option premiums are going to get crushed. And that's what we're going for right there. It's a super high percentage. You get these huge cushions, and we've pulled some really nice returns with those setups. So that's something we're going to try to keep an eye on a little bit more in the future. Try to have a more reliable way to scan for those and keep them on our radar for when they appear, because even when they go poorly, they could still kind of go well. For example, you could see the spike up here. Sometimes the spike is sustained, like we did it on FULC a couple weeks ago. There was a huge spike, and the spike was sustained, and we just cruised to max profit. We did another one on ALEC. There was a huge spike. If I can get back to the 180 day, huge spike. And again, stayed above that former baseline. We cruised to a decent profit on that one. But with Nrxp, the spike was given away. And the reason being is because they were a little bit sneaky with what they did on a Thursday morning, right about here, where it looked like it was going to start to level out around that pre-spike base. They announced that they had an offering. So they were going to dilute the shares, and that was at 9:15 in the morning. So that was not a fun little surprise before the market opened. But point being, dropped all the way down here. So you got a huge drop, right, from the peak of 1830 down to 1050. That is almost a 50% drop in the price of the stock. But with the inflated implied volatility, meaning the inflated option premiums, we were still able to manage these. So right off the drop, we knew what we were going to do was increase our position, right? When we enter into positions, we never want to have 100% of the capital that we're comfortable with investing into that position put into it off the bat. So we knew that we were comfortable adding more. And I added more at open. I sold some for 15 cents a piece. These were the first ones I sold there. Chronologically, I guess these two are out of order. So I doubled my position there because I said, this seems like free money, right? Staying above $10 a share for the next 48 hours seemed like a pretty high percentage outcome, especially if you take a look at the 180-day chart, and you'll see it really hasn't traded below 10 for too much time, right? It got down to 8 for a second, but it quickly spiked back up before, like, it went down to 8 and recovered before the market was even open. So that bounce off that below 10 level was pretty rapid. So I liked 10 as a potential support point. And that's exactly what happened, right? Because it leveled out at about, or not leveled, but it bounced off 1050 pre-market. If we go back to that 10-day chart, 1050 was the lowest it got pre-market. Bounced back up, we remained patient, and we added more of these because even though we sold our first 15 for 15 cents a piece, implied volatility picked up a little bit again, and we were able to sell more for 25 cents a piece. So I figured all in all, the value proposition on that was pretty solid, right? We'd be able to recover about $600. We'd already made $200 off the bat. So that was an $800 overall profit we were looking at as long as Nrxp finished above 10. But the bigger issue, right, was managing the losing position, which was that 12.5 strike put that we sold before close on Wednesday that got crushed by that big drop on Thursday. So we figured as long as we could close it out to where the 3 winning legs we had, I guess, outperformed or outweighed that one big losing leg, I was going to be perfectly happy. Because like you saw with FULC, like you saw with ALEC when we were pulling those up, a lot of the time it levels off or keeps continuing higher and you really don't have anything to worry about. This really is more of the one-off case that it's not like it never happens, because if every trade went our way, we would be very rich and wouldn't have to worry about any of this. But it is something you always need to be prepared for and plan for, and that's exactly what we did. And when things move against you this sharply, right, a 50% drop nearly in 24 hours, you need to be okay with taking, any profit at all, but nonetheless just trying to break even, because breaking even when you have a bullish position on a stock that pulls back 40-ish%, that is a huge win in our eyes. So the fact that we were able to come out with a $50 profit on this despite the big drop, we were perfectly happy with. And again, it was another one of those where in hindsight it finished at about 12 a share, so these would have been worth about 0.6. So if we held on a little bit longer, we almost would have had a profitable week. But we can only trade based off what's in front of us. When this was happening and our XP was around 1150, was bouncing around here, we said, it could go back to 1050. We don't want to get crushed and have this thing be worth 2 and then we lose 2,000 more bucks in the blink of an eye. So that was something we 100% wanted to avoid. So we got out of that, took the profits, walked away with the $50 overall profit, which, is a little bit regretful because we were in and out super quickly. It was a little bit of greed driving the fact that we got in for more of these, but at the same time we also got super unlucky that they decided to dilute their shares right before the market opened on Thursday. So hindsight's 2020. We're never going to get too mad at decisions we did or didn't make. I think what we did, how we handled this, we stuck to the script, we followed our plan, so I'm never going to be too mad at what should be a smart play. The smartest plays aren't always going to be the most profitable plays in a given situation, but the smart plays, if you make them continuously over time, are going to compound into some really nice returns and guarantee that you make a really solid, you make some solid profits on a yearly basis in the market, and you're not going to blow your account up. And then I guess moving further down here, ZEV was another one of those IV reversion plays, right? ZEV, you see the big spike up to 12, and then it dropped all the way back down to 750. And again, identifying that base that it could fall back down to is so important here, because that is what was behind our decision to sell 7.5 strike puts. We saw it bounced off there back in April, another bounce back at the beginning of June, and a third bounce near the end of June. So we said, you know what, I think 750 is going to be a decent price off the big spike. We were able to sell these for 20 cents a piece. So all in all, I think we were able to close these out for an 18 cent or $18 profit per contract, and we sold 50 contracts. So I think roughly $900 of profit on that trade. And again, this is an example of what happens when there are big spikes like this, and it probably, quite frankly, is likely that it's going to fall back down. But the other thing that's going to fall back down is that implied volatility as it continues its downward move, and that premium is going to dry up more likely than not, assuming there's not a huge move against you. And this was a pretty big move against us, but this just speaks to how big that cushion is that we allow ourselves to get. This thing dropped 30-ish, 40-ish% on us, and we still nearly hit max profit. So that's why we love these IV reversion trades. Visalink is one. Unfortunately, we tried to, get some premium when it was on the table a month ago. We liked the 250 level because we had seen some bounces off here, but it broke through that 205-ish support level. And we really didn't want to go on any further with this. I think the stock could have a good future, but I think it also is a probability or a possibility rather that it gets back down to this 140 level, and I didn't want any part of that. So we jumped out for 70 cents a piece on those 2.5 strike puts. An overall loss on that trade. We're not going to win every single trade that we enter into, but sometimes when you think your money can better be spent elsewhere, and that is 100% what the case was with Visalink for us, it's smart to just take the loss and move on to the next one. So, always tough to lose money. We never like to lose money, but we hope and have shown, at least historically, that we're going to win more than we lose as we continue to widen the gap between our returns and the returns of the S&P 500 index so far year to date. IGC is another loser for us, and it's kind of really the one IV reversion loser that we had, and I think our approach to this one could have been a little bit better. We got impatient when we sold these things. But, it is what it is. We're going to take the small loss on that one and move along as well. Good question from Locust in the Twitch chat. What is the best way to scan for the IV reversion stocks? And I think one of the best ways that I've found so far is if you go to Market Watch, and there's all sorts of different lists. We have our personal scans that you could pull in here. We have those available on our website. There's different, you could look at different indices. There's all sorts of lovers and losers type information here. And shout out to Fear Aggression for the follow on Twitch. We appreciate that. I love hearing the old notification noise and seeing that thing in the top right of the screen. But back to the point I was trying to make here. You could get this list. It's called Gap Up. And I think if you go here to where it's percent through G, right there, the Gap Up list, if you select that, you'll be able to see the biggest gainers on the market that day. And Fear Aggression's coming over from Discord. I love it. Appreciate it, you guys. Thank you for joining us on this Sunday night where we try to plan how we're going to make money this week. But I think this is the best way that I've found to scan for them so far. If you just sort this by percent change. And again, this is one of those things where not every single stock on here is going to have options, right? You have DVCR, which had a big jump. But if you click on it, right, or you put it into the trade tab, there's no options for it. So I'm working a little bit on trying to develop something that can not only scan and filter out options opportunities a little bit better, but also alert us so we can be ready for when those spikes occur. The good news about these spikes, though, is you don't need to be, as is the case with a lot of these strategies that we're running, you don't need to be hunched over your computer waiting for a spike, right? With Nrxp, we found out about this one. We were maybe, I don't know, it started spiking at 11:50 a.m., 11:40 a.m. is when that first green candle was, and then it settled around 16 by 12:30. So there was about a whole hour that this spike was going on for, right? So the window of opportunity was pretty high. It's not like you have a 4 or 5 minute window to get in the hurry and try to sell some puts. You had about 45 minutes to an hour that you had the potential to get in here and sell some puts. And as evidenced by how we kind of went in for seconds at the end of the day, I really think that opportunity was there for the end of the week, despite the fact that it didn't end up being a profitable opportunity on those 12.5s, the second ones that we opened. I don't think that changed the fact that that window was there. But with that said, yeah, that gap up list that we have on that Market Watch tab, I think right now is the best that we've got to work with. We're going to try to figure something else out to find some big spikes and, prices, implied volatility, putting those all together to find some more IV reversion trades, because I am a huge fan of those. I mean, a couple weeks ago when we had a really nice week and made $3,600, these IV reversion plays, ORPH was one, ZEV was one, FULC was one. Those alone were super easy, super low stress, in and out, and we made $1,600 off those in a relatively short time frame. So those are definitely something we need to get a little bit better at, and figuring out where we can identify these. Another great point from VS in the Twitch stream saying, FinViz also has top gainer and loser, and you could sort by optionable. So that's also a very good option, no pun intended. But yeah, I think maybe finding ways to not only isolate just the spikes, but also identifying opportunities that have implied volatility spikes along with those, and having some super big premiums that are super far out of the money. That's something we definitely are planning on working on and trying to figure out. We got another question from Cash Money in the Twitch chat saying, is there a scan for implied volatility we could put parameters around? Absolutely, and that's kind of the basis of how I would build that, right? When we have our our high ROR puts, when we're looking for those puts with really high return on risk, that is one of the parameters. And actually, it's kind of an irrelevant parameter. I know in the video I have it in there, but you're really only limiting yourself when you have an implied volatility scan for this high put premium one. So I've since widened the gap on that because ROR is really going to be the biggest thing for us on this high premium puts. And then we go. Yeah, another good point from Diamond Hands. He's in the Twitch chat saying that if you want to use Thinkorswim and you don't have Thinkorswim, you can open a paper trading account and then it'll let you use the scanner. But FinViz, as recommended by VS, also is a really good scanner if you don't have the opportunity to do that. I know sometimes you might not even be able to sign up for TD Ameritrade or get that paper trading account if you're outside of the United States. I know we've got some international traders here, so FinViz is definitely a good backup option. We'll try to build something out on both and see what we can get working. I think it'll be a very profitable project to be working on, so we'll see what we can get with that. And with that takes us to the end of our weekly recap. It ended up being a little bit drawn out because we had a lot to talk about. And I think we covered a little bit of what we're doing for next week, but we'll get down into this list and start getting some new ideas developed for the upcoming week in a minute here. But that is how we did, right? We lost 0.46%. We still outperformed by 0.12%. We had stuff we did well. We had stuff we could have done better. But, we stuck to the script. There was a big pullback in the market. I mean, Friday was super green, which was very helpful because at some point we were down about 2% on the S&P 500. So things were looking very bloody for a minute there. But, we tread water on a week where a lot of our stocks moved pretty sharply against us. So that's always a positive. Things aren't always going to be this red. Things aren't always going to move against us. And hopefully we have a little more of a low stress week coming up here. So I'm going to take a quick sip of my water because I feel like I've just been talking to myself in the corner of my bedroom for the last 45 minutes. And I'm getting a little bit parched. And then we'll get on to what we are going to be taking a look at for the upcoming week in the market. All right. And before we get into that, really quick plug here for our Discord server if you're not already involved in that. I think it's a super great place to be. We can only come up with so much on a week-to-week basis on Sunday night because so much happens on a day-to-day basis in the market. If you want to join our HD Premium, this is what the shameless plug is for. We've got tons of chats going on in the premium. You get access to all the trades we make as we make them, as you get alerted to those. We also have full trade plan write-ups, so we talk about what we're going to be doing for the upcoming day in the market, or if we have a trade, we talk about what we're going to be doing. I mean, here's an example of what we had on Friday, where we had Corsair. That was our plan. We talked about what we're going to do for literally every single trade that we had expiring that Friday, and a lot of our plans worked out pretty well. So I think it's a super useful thing to have, regardless of the weekly or monthly package that you pick for HD Premium. All the prices are going to come out to less than $1 a day, so we did our best to keep it affordable for everyone. And even if that is something you can't sign up for, we also have the opportunity to get a month free of HD Premium if you sign up for Webull using the link that we have right here in the Discord server. And opening an account, making a $100 deposit, and you get 2 free stocks from that, which equal at least $11 because you get one between 3 and 300 and one between 8 and 2,000. You can make that $100 deposit, pull the money out, and then go along your way with your free $11. So it helps us out, hopefully helps you out a little bit, but that is another way if you are not looking to pay for premium. We have that opportunity right there to get a free month. So back to our regularly scheduled programming after my shameless plug, and appreciate that, Cliffo, saying, giving us a little shout out for our Discord. Cliffo is one of our more successful traders that we've had lately. I think he just hit the 1 in a very short period of time, so we're excited to see if anyone can join. I think she might be a little bit busy tonight, but Jules was our first member of the $250,000 Profit Club this past weekend, so we were super happy and excited to see someone finally hit that mark. But I think Cliffo might be joining her soon if he keeps up the rate that he's moving at. But with that said, that Discord talk, we are moving on to what you guys probably care about, which is not me shamelessly advertising the services I offer, but us talking and coming together to come up with some ideas to make you some money for the upcoming week in the market. So these UWMC plays, we've had this December 7.5 strike put sitting there. I'm going to let that sit in the background. We sold it for, I think, $1.20. So we have a 630 break-even price, and that's something I'm not even remotely worried about moving forward. So perfectly happy to let that one sit in the back of my portfolio. The margin requirement on it right now is just about 15,000 bucks, so about 10% of my account, but I'm okay locking up that much cash because if this thing hits max profit, we've got another 5,500 bucks coming our way. And it's one of those things where I think mentally right now, and I know some of you guys might be in the same mindset, every time I see December or January expiry in the back of my head that's like a year away, but it's already almost the end of August, we're getting into September, which is crazy to me. But point being, expiry on the Decembers aren't as far away as they might seem, so that's, holding these for 3 or 4 more months isn't going to be the worst thing in the world for us if we've got that lower stress type profit that hopefully will be rolling in soon. We did the same thing with Sofi. We sold 10 strike puts. That stock's trading at about 14 bucks a piece. So as long as this thing finishes above like 930 or something like that, we're going to make profit overall on Sofi. So that's another super low stress one we've got sitting in the back of the portfolio. A really, really favorable margin requirement on this, right? If we were going to fully take assignment of 5,000 shares of Sofi at 920 something a piece, it cost us 46,000 bucks. But to hold this position right now, just as a cash secured put, only takes 5,000 bucks. So really, really nice margin requirement. And that was one of the big reasons that we did this, right? Because it takes $5,000, and if we hit max profit, we're going to be pulling $4,000 off $5,000 of capital, meaning we're going to get a roughly 80% return on capital on that trade that's just sitting in the back of our portfolio until January. And that is never something that is a bad value proposition right there. So I'm kind of starting to, as I build my account, come around to the idea of using these really nice margin requirements to sell super far out of the money options that expire a little bit longer term. And if Sofi rebounds from where it is right now, to give you a little bit more context about where we sit with that, if Thinkorswim will come back up for me, there we go. Sofi is currently trading around 14, I think, yeah, 1404 is where it closed out Friday. If you go to the 180-day chart, it is in a little bit of a downtrend, but we expect to see a little bit of support somewhere around this 14 level. That's what we started to see as it bounced off 13.5. But at the end of the day, by January, as long as it's above 920, which is all the way down here, we're going to be making money on this thing. So that really nice cushion to just sit back and watch. And it's okay because it's not tying up a bunch of cash for us. And we're basically collateralizing $3,000 or something like that. Sorry, 5,000 bucks to let that thing sit in the background. So you could do this for yourself if you have margin privileges enabled on your account for as little as about $100 per contract. And that is where that margin and things like that really work out well for us. And I think I somehow just opened another window of this. That was really impressive right there. Okay, back to the original window. Icln, we don't really talk about that because it's pretty boring. Corsair, we rolled forward to 27.5 calls. You'll recall from last week we had a straddle where we had both calls and puts. I haven't rolled the puts yet because I wanted to wait for a pullback in the stock. But if you take a look at Corsair, at the end of the day on Friday, we kind of got a little bit of that pullback, but knowing what we know about how on Thursday afternoon it pretty much bounced off 25, there still is that potential for a little bit bigger of a pullback, and we never want to fully put all of our money in off the bat just in case there's a huge pullback. So I'm going to hold off on the 27.5 strike put portion of that trade for now and just leave that be how it is, because it is taking up it's taking up 13% of our account. And the more I look at this, I'm a little bit conflicted because one, Corsair, we've talked about this before. If you go to the 180 day, it's super, super beat up right now. There should be support at the 25 level, and we did see a little bit of that as it bounced off 25 for the first time. But if we go to our buddy RSI over here, and I don't know what this looks like right now because I haven't, so we're all going to find out together. Yeah, it was super oversold. We got the bounce we were looking for, and I talked about this a bunch in that Trade Plans blog write-up that I showcased a little bit earlier. But every time it had gotten down this low on the 180 day, there was a bounce. So we got that bounce, and it's no longer oversold. So I don't know if I could really rely too much on the oversold RSI bounce in the near future. So with that in mind, between now and September 17th, if these expire worthless, I'm only going to make about 990 bucks, which, is a decent amount of money. Don't get me wrong. But that 990 in the context of my overall account is going to be, if I hit percentage right here, there you go. It's a 0.65% return on that premium, and it's on a play that's taking up 13% of my account. I really just don't think this is going to be that great of a value. And I think about this, the less I actually want to hold on to this position, because it's fully cash secured. It's about a quarter of my account. So that is something I also want to be cognizant of moving forward. And when I built this out this week, so I think this is also an interesting discussion about, margin requirement using leverage, where I would stand if things were fully cash secured. But as far as actual buying power that we're using about 46% of our total overall buying power. So we've got a lot of cash on the sidelines that we could put into play and hopefully get some returns from. However, we always want to be cognizant when